Hey, real life traders from around the world. I hope you're doing absolutely fantastic. This is Jeremy Alexander Newsom. I still have a little bit of the cold, but I'm definitely getting better. And today and yesterday, Brad Reed and Angie Barbosa did a phenomenal job on the trading floor, kind of taking over and just being rock stars as usual. But I wanted to do a real life stock review for you today, which is Wednesday, January the 7th, 2015. Wow, 2015. So let's check out the general market, the SPY. I like today's candle. If we hop over to the long-term moving averages, you guys can kind of see we're making higher lows, and we have a really, really beautiful candle off of the 100 simple moving average. I call this candle a new white soldier. So in my opinion, on the SPY, if we actually continue higher tomorrow, I will be more bullish than bearish. It'll be interesting to see how we play it. We very well could gap, and we might gap. And if we do, it'll be a retest gap. So if we gap up to here, let's say, for example, I will wait for a little bit of a pullback before getting in bullish, and then I'll get in bullish and let the trade continue. But 202.98 would be my bullish entry on the SPY, and the stop would be approximately, at the lowest I would be below the wick of yesterday's candle. And yeah, some targets would be ultimately at about this, the all-time high, which is about a 1-to-1 risk-reward ratio. If we wanted to scoot up our stop a little bit, I could understand why, and it would make sense to me overall. I do like how the DIA is shaping up mostly, though. The DIA, great white candle off of this really, really strong support resistance area off the 100. And in my opinion, if we continue higher on the DIA, again, I'd be more bullish than bearish. So my entry kind of be approximately right about here. And what we could also consider is if on the DIA we could have a location to buy protective puts. I think this is going to be more likely my actual trading plan, is if we move lower than the low of today, that's going to be our stop. That's going to be a location to buy protective puts. And our saving grace line, so to speak, would be about 171, 172. So as long as the DIA stays above this particular price, you would stay in the actual shares or calls, and you'd be doing covered calls on those shares, protective puts, collars, things like that. And you'd only actually get stopped out of your long trade if we close below there. So that's probably what I'm going to be doing on the DIA, because I actually kind of am bullish in 2015, at least for the next 4 or 5 months. And then I think we might be getting the bigger retracement overall on the market. So it'll be interesting to see how it plays out. QQQ. The Qs are a little interesting, but again, at a really good support. Here's your resistance, old resistance, new support, gorgeous candle off the 100 simple moving average. So in my opinion, again, looks more bullish than bearish. IWM, same thing. Nice candle, more bullish than bearish. I mean, bottom line, today was Weekly's Wednesday and the trading floor, and Brad did awesome. Talked about some bull put spreads down in this area expiring this Friday for about 4 to 5% return. So we'll be keeping a close eye on those as well to see how, in fact, they do play out. So let's look at Apple for the moment. Apple is a beautiful, in my opinion, morning star reversal. I think Apple is just phenomenal. So my trade plan is going to be to buy above Apple if it continues higher tomorrow. Beautiful morning star reversal right off the 100. I mean, it's just exactly what happened back in October. So if it works once, it might work twice. Stop in this example would be down here, approximately below the wick. So I'll go ahead and take the stop, put it down there. Here we go. And that would be kind of your entry. 108.37, stop at 104.32. Ultimate target about 120 and some change, which is a good risk-reward ratio. Earnings are about 3 or 4 weeks. So, if the trade bounces off the 100 and comes up into this area, could get into some type of collar over earnings for Apple. And that'll be, really interesting to see how and if that does, in fact, play out. By the way, do you guys like my deep voice? Barry White meets the stock market. So, I don't know. I like it's deep. It's cool. But it's actually not that I have a cold. I kind of think I have laryngitis. This is my normal speaking tone. And it's weird. So, I don't know. We'll get it figured out. Let's do a few more. Let us look at LNG. I haven't looked at LNG in a while. LNG is kind of in a channel. And this is one that we did about 2 weeks ago on Weekly's Wednesday for a 67 put sale. and we sold the put on this day, which is December 18th, and that worked out just fine. So overall on LNG, it does look like we might be pulling back into some type of support level, but all around this area, the $60 price range is a good price to buy LNG. So this is a very, very nice retest gap. We are actually retesting right now. So kind of anticipate if we break through this, good chance we move a little bit lower. But I'm actually kind of anticipating a bounce tomorrow on LNG. So that'll be really, really fascinating to see if that actually does, in fact, play out. And LOCO, really, really good candle, good gap yesterday. Nice little potential double bottom, good volume. Earnings is not into the too far distant future. And at the moment, this is a pretty strong little pattern. So if we get a little small pullback, maybe tomorrow or sometime next week, and a little bit of a bounce, I think LOCO is actually a pretty good buying location. Buy low, so high, good support down here at $19 and some change. And realistically, your target would be about 32 potentially. So that'll be fascinating. I don't really know how it's going to play out over earnings. I would imagine a gap down, but we don't really know for sure. So we'll kind of wait around and see how and if that's going to play out and how the earnings were going to impact LOCO. Let's do one more. Let's do Facebook. And that's not Facebook. Fabrinet. I don't know what that is. Facebook. I want to bounce off the EMAs. That was kind of my trading plan. So as of right now, we still do not have a bounce. I mentioned back here, I did not anticipate that Facebook would trade all the way down to 72.45. I said it's possible, but I doubted it. But after 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 black candles in a row on Facebook, I kind of do anticipate a white bounce tomorrow. So keep an eye on Facebook. If it does gap up tomorrow, might be a good time to buy it. And that would, in my opinion, be the bounce on Facebook. So keep an eye out for that, ladies and gentlemen. Hopefully my voice will be better Friday, but more importantly, I'm sure it'll be better next week. And I appreciate all those who have signed up for the trading floor this week to enjoy the Enrichment Week, which is our free giveaway week of 2015. And thanks for all the subscribers to us on YouTube and all the likes on Facebook. You guys are doing phenomenal. And I truly, I know it doesn't sound like it, but I appreciate it so much. You guys are just, I love it. You guys are phenomenal. Thank you for all of your support. And real life trading is really going to change the world and change the way people see professional traders. You guys rock. Have a great Wednesday. I'll see you later. And until then, remember, love life, live life, and trade it.